Everyone, and welcome to another edition of the Smart Investor Stock Market Show, where smart investors get their up-to-date price analysis and market information. Rebounding markets, we have a S&P 500, a Dow, and a Nasdaq that is rebounding and bouncing nicely off of pretty strong support. So we're going to take a look at that. We're going to also take a look at the reversal in the US dollar, especially amongst with the euro and the Japanese yen. We're also going to take a look at what's happening in gold, because even though the dollar is down, we haven't really seen that much movement in the gold market. We'll also take a look at different sectors in the US stock market. We're going to look at a number of different sectors. We'll probably look at about 8 or so and look at if you are holding stocks in that sector, in that sector generally, which sectors are doing well for the year, which sectors aren't doing well for the year, and we'll take an objective price analysis of the sectors. But let's get to the markets where we have at the time of this recording, the S&P 500 is up. It's up 13 points or 0.57%. The Dow is up 47 points and the Nasdaq is up 71 points. Percentage wise, the Nasdaq is up 1.13%, the Dow 0.22%. The Russell 2000 is up 6 and the volatility index is down 4.62%. We have seen volatility go back and forth over the last couple of days. But what's important for the S&P 500 is that the market came down to an area of support in the 24-25 region, and it's bouncing out of this support, and we're closing above the 2450. So that is, in the short term, positive for the stock market at this point in time. Taking a look at the 4-hour charts, for those of you who have been paying attention to the analysis, we want to see this cycle of lower highs, lower lows be broken. This was a low, this was a high, a low. So this low wasn't as low as this low, and this high is breaking above this high. So we want to see the market continue upwards and close above the 2475 region. So that is our immediate focus here for the S&P 500. Looking at the Dow Mini, we see a similar chart pattern where market lower highs, lower lows, market made a high, made a low. This low wasn't as low as this low. Market is trying to charge above this high here, above this 21,800 region. That's what's happening in stocks. Fairly positive for the bulls at this point in time. Naturally, the markets could sell off at any moment, but right now we see some short-term recovery for the bulls. Taking a look at the overseas markets, the German DAX hasn't been updated on this chart yet, but the DAX essentially bounced off of support in the 11,900 region. But the DAX is still seeing this lower high, lower low pattern, and it closed up some 56 points today, the German DAX. So we want to see the German DAX close above the 12,300, 12,350 region. The FTSE in the UK was up 27 points or 0.38%. So equities have been doing well across the board. Taking a look at the US dollar index traded down yesterday and looks like it wanted to breach this area of support in the 92 region. The market has formed a doji candle and is trading above that. So it's looking like that area of support in this 92 region is holding. There's a red line that I drew, or you can see the red line. This is the area of support here. This whole zone is a support zone. The market traded down to this red line and is bouncing nicely, which is positive for the dollar in the short term. So that what that could do is relieve some pressure on the US dollar that has been really in a downtrend from the beginning of the year. Euro reversing after trading near that 120 $1.20 mark. The market is reversing into 180.97, and the Japanese yen is trading off of resistance. That's why it's important to look at these resistance levels. 92, as you can see, the market has rejected that 92 level and is doing so again with the Japanese yen. Okay, looking at the gold market, gold today is holding up pretty well. We see that the market, as of this recording, its gold is down ever so slightly, and it's staying above its resistance level. So that is positive for gold. So even though the markets are down, well, not the markets, even though the US dollar is gaining ground for the day, we have gold not really moving to the downside very much, which is very positive for the gold market. And I believe that we're in a breakout situation here with gold, and what we want to do, or what gold needs to do, is stay above that 1300 and 1280 region. Once it's above that region, we could see some explosive growth in gold. The next obstacle in gold will be the 1350 region. If we close above 1350, that would give even more evidence that this bullish breakout has taken place. Looking at the crude oil market, oil is down on the day. It's the market, not much momentum here in the crude oil market. Heating oil was up for the day, but it has traded to the downside. Another commodity that has been doing well over the last couple of days is the copper market. It's down today, but as you can see, this is a clear uptrend in copper. Okay, now let's take a look at some of these sectors that make up the US stock market. Let's see if your portfolio is in a sector or you have stocks that make up these very strong sectors in the market. The first sector we're going to look at, and we did analyze this sector a couple of weeks ago, and that is the energy sector. And with energy, I just looked at the crude oil market, and folks always ask if they should be in a particular stock or a particular market. And as you can see, this energy select sector is in a downtrend. It's lower highs, lower lows, lower highs, lower lows. So this is a downtrend, and it has been in that downtrend ever since the start of the year. So this is something I would not want to be in. If I was involved predominantly in this sector, I will be exiting this sector. If you have a stock in the sector that's doing well, that's fine. But the sector on a whole is very negative, and I wouldn't want to be overweight that energy select sector. Looking at the XLF, we see that this sector has done fairly well over the last year or so. The financial sector still off of its highs that it was at in 2008, and this is a sector that has really underperformed S&P 500 because this was a 2008 high, and the market still has not reached or traded above that 2008 high. While the S&P 500, if I bring up a chart of the S&P 500, we see that This was the 2008 high with S&P 500 here, and this is the rally so far. So this rally has really eclipsed that 2008 high. So the financial sector was not a sector and is not a sector that I believe is very strong, because it has really underperformed the market. Okay, looking on XLI, stocks are surging to the highs of the day as I speak. Okay, so the industrial select sector, very very strong sector. It's at or near its high of the year. It's tracking the S&P 500 nicely. You can see it's way above its 2008 high, and this is a sector that is not doing badly at all. So if you have a lot of stocks in this sector, very good to you. We want to remember, when we have portfolios, we want to make sure that we are in the best and brightest. It doesn't make sense to be in laggards like the financial sector, the energy select sector. Those are laggards, and it is important that we recognize these laggards and get out of them. Investing is not about emotions. It's about making money and and turning your money over. And if you are in an underperforming sector, then you should be looking to exit. Material select sector, it's near its high of the year. This is a sector that is not doing badly. It's not doing overly great. As you can see, the 2008 high is here. The market is above the 2008 high, but it's underperforming the S&P 500. So the material select sector, and even for the year, it has done okay since the beginning of the year. Nothing really to write home about. There are other sectors out there that are doing much better. Okay. And as you can see, when I'm examining these charts and analyzing these charts, you notice I'm not looking at a lot of fundamentals. I'm not looking at the price earning ratios, etc. We're just looking on pure price action. Price action can tell you a lot. For example, this price action can tell you that this is in a very strong uptrend, and this is the technology select sector, very strong uptrend. And if I was looking to invest in a sector, I would look at the best and brightest. And the best, if we're in 2000, looking to invest in 2000, let's say this is 2013, this was in an uptrend. And it's my view that you seek out markets that are in a positive uptrend, and this would be something I would be looking to buy in 2013, because the market really has rallied and rallied and rallied and rallied. So seek out the best and brightest, and this is a beautiful example of something that is doing fairly well. Okay, and is definitely outperforming what we're seeing here. What we're seeing here, because this is the 2008 high, 2007, 2008, and we can see we're well above that level. Okay, let's move on. I see that I have a list. This is not really a sector. This is an individual stock. How did this reach? Actually, yes, this is the consumer staples. Okay. XLP consumer staples. How has this done? Since the start of the year, it has been up. It peaked in June, and we saw a very strong sell-off in early June, and the market went down from 57 down to 54. Taking a longer term outlook on this sector, we can see that this has been one of the better performers This is a weekly chart, and we can see it's in a strong uptrend. And this goes, if you have a stock and you see a stock looking like this, you know you're in the right stock. If you have a stock and it looks like the chart of the energy select sector, I would be looking to exit that sector, because the stock market is up now. Market is trending well, and you want to be in the best and brightest. If the market ever turns around, the sectors that are performing poorly, like the banking sector, or sorry, the financial sector, will get hit the hardest. Um, so that's a word of warning there. The consumer staple sector doing fairly well. Now, a sector that is up to new highs is the utility sector, and it has done okay since 2008. Again, nothing to really write home about, but it's much better than the energy select sector, and we want to be in stuff that is in this beautiful uptrend. Okay, so that's a look at the sectors. Now let me just take a look at one more sector. We have time for one more sector, and that is the U.S. toy sector. I've been buying a lot of toys recently for my son, so I know a lot about toys, even new cartoons. Oh, sorry, I needed the. And for those of you who always ask, this is the charts are e-signal. Is the toy index going to come up? Dow Jones toy index e-signal is broken at this moment. I can guarantee e-signal normally performs very well. I don't know why it's not bringing it up at this point in time. But what I wanted to say, it's the right symbol, because here it's probably just broken temporarily. What I wanted to highlight is that this is a sector that is doing well, a very strong uptrend in the Dow Jones US toy index, and why shouldn't it be? The toy index has done fairly well over the last couple of years, and if the market does continue to rally, will continue to do very well. Let's just take a look at other charts. Look like I may have to restart the charting application. Well, maybe this is a time to cut today's episode short. Remember, for those of you who are new to the channel, what you can do is subscribe. We'll always be looking at what is profitable in the markets, what is doing well in the markets, and pointing out profitable opportunities as we see fit. At this point in time, and we like to point them out before they happen. At this point in time, we're really tracking the gold market. Gold is doing fairly well, and we have been speaking about the promise of gold, and that gold should do well over the next couple of months for the last couple of weeks. So we said it before the market really broke out. So we will be following that as it happens. This is the Dow Jones US Toy Index. The charts probably were just having some minor server issues. But as you can see here, market is in a very strong uptrend, not doing badly at all. And this is a lesser known index that folks probably won't or haven't paid attention to. But as you can see, 2008 the high was here, 400. It's over 1,000. So done very well. And that's why when you're investing in the stock market, look for the performance. Look for what is doing very well at this point in time. Okay, so remember, subscribe to the channel. If you want more information, you can go to smartinvestorcentral.com. and we'll always have the daily analysis. But if you subscribe via YouTube, you can get and hit that bell. There's a bell after you subscribe. Hit that bell to get the notification when we do a new video. Thank you very much for listening. I'm Beyond Dale. I'll see you again tomorrow.